everyone. I'm Nadia Vatsalidis. I'm Senior Manager People Operations here at GitLab, and I'm joined by a bunch of my colleagues in the country conversions team. We're quite a large team, so Total Rewards is here today. Brittany, thank you for being willing to answer the questions around that. And Igor, our Director of Tax, is here as well. And Paul, thanks for chiming in. Really appreciate it. Paul is our CFO at GitLab, and he's willing to answer questions as well. And the payroll team is hoping to be as well today to answer any concerns around that as well. But it does take a large team to do these conversions, so I'm appreciative of all the input in the team. We added a video. I really hope everyone was able to watch it. If not, feel free to watch it at another time. And this is a live interview to answer a few frequently asked questions that we've had over the time. Over to questions. I see Riab, thanks. If I'm pronouncing it correctly, thanks so much for asking. Do you want to verbalize your question? And if you're not on the call, I'm happy to verbalize it for you. So the first question we have here is, how does converting contractors from contracting with GitLab BV, I think that's BV and ITB, BV to contracting with a third-party entity, for example, CXC self-employment model, mitigate risks associated with being a contractor, for example, Romania? Igor, if you want to answer that
sure.
for us.
Absolutely. So thanks for that question and the introduction. So predominantly that's done by basically building a Chinese wall, as they may call it. So, for example, using CXC self-employment model, it does mitigate risks in case we do have a GitLab entity hiring contractors in a certain country directly, or putting a third-party supplier in between. So that more or less gives us a shield that guards us against any employment and tax-related risks.
Great. Ricardo, if you're on the call, I see you have a follow-up question on the first one. Do you want to verbalize your question? And if you're not here, I'm happy to verbalize it for you. So Igor, follow-up to this question is, I have the same question, but for technical account managers, post-sales, what is the risks? What is the risk of contracting a technical account manager, TAM, as a contractor, B2B in certain countries? Is that risk mitigated with CXC self-employment?
So what is the risk of contracting a TAM as contractor, B2B in certain countries? So generally, when you talk about customer-facing roles or sales-related roles, tax authorities tend to see those as a branch, or basically a company sitting in a certain country represented by a TAM, one of our TAMs. And if that's a B2B type of contractor, the problem is we may have an issue that this is a dependent agent selling or basically having a customer-facing roles. That could lead to a corporate income tax risk. So that's basically the answer to that first question. The second question, is that risk mitigated with CXC self-employment model and PEOs? Not directly, to be honest. It does basically put the risk a little bit to the side, but in the end, there's still a sale generated or connected from a TAM in a certain country on behalf of GitLab. So that generates a taxing point for local tax authorities. So that answer is no.
Eliran here, time to jump into it. Yeah, I'm just curious because I had the conversation also with a local accountant. So that answer is maybe a person if you have an employee that's client-facing, right? What happens? We also have that cutoff of number of people, not necessarily client-facing. What's that risk that we're trying to mitigate with setting that number? How do we get to that number? How are we resolving that?
Well, I think that's a great question, to be honest. I think for us, it's really important to also think in materiality. So we can hire contractors in certain countries. If it's just one or two, reclassification, employment, and tax, for non-sales roles, especially customer-facing roles. I think that's an appetite that we can manage. However, as you may understand, the more people you add, the more the risk increases. Why we choose 5? I think that's, I don't know whether we can share the spreadsheet, Nadia. Do we have something that we can share? So basically what we built is some kind of decision model.
Sorry, Hugo, we created a merge request and added a link to how we do the calculation, but not the sheet because it had compensation even for 1. And so that didn't work. Okay, but we do have that in the handbook now.
All right, fantastic. So with that model, basically we built a decision model where we highlighted the risks. If it's, of course, it's materiality against a certain tax rate. So in the green boxes, it's left low. You know, we can take that risk, but the more people you add, the more your risk increases. So we generally take into account 20% of employers' obligations as an average risk. We built that model based on on our own investigation and of course external tax consultants. So, but during the course of the year, over the years, we more or less found that when we hit this 5-person threshold, this really becomes a problem for us in terms of this materiality threshold, and that's the reason why we choose 5 as the cutoff limit.
But essentially, it's the same risk. It doesn't change the risk if you're not client facing for GitLab, is what I'm saying.
Well, yeah, the reclassification risk is there, but that's employment tax. But if you talk about really the customer-facing roles, that's really a dependent agent risk, and that's a corporate tax risk, which leads to allocation of profit, and that's a total different discussion. That's even worse, basically, so that you have a deemed entity in a certain country. And reclassification, that's more employers' taxes and employers' contributions.
Thank you.
Great. Over to our third question. Tomislav, if you're on the call, if you want to verbalize your question. Thanks for adding it asynchronously. I'll read it. How does GitLab handle the case where a significant decrease, so 10% in a net salary due to the flat rate tax deductions provided by the state not being available anymore, would be the case if a contractor factor is decreased by the usual 17%? Is this something that would be taken into consideration? Do we have any precedent with similar cases? Asking because there were a lot of different answers.
Okay. Shall I take that one, or should I? There are four questions here. Okay. Significant decrease, more than 10%. There are even cases where we had 30% drops of net income. But to start with, I think a tax law and tax deduction should not be decisive of what we present in certain cases. However, if we really talk about a huge income drop of 30%, it's not the cleanest way to from employer perspective. So we always try to find the best solution. That's why Brittany is here. That's why Nadia is here, and of course the rest of the team that is supporting us. We always try to find the best solution for that specific country and for that team. And maybe Nadia, you want to chime in, or Brittany? So yes, it would be taken into consideration, but precedents, yes. I'm not going to say anything about it because it's really a case-by-case analysis, and that's hard for me to give you examples and precedents in certain countries. I think it's really hard to compare, for instance, a Romania conversion with a, let's say, an Austria conversion, because the tax rules are really different in those countries.
Yeah, and I think my video is not working, so I'm sorry. But I think the one thing that's really clear too for us is to make sure that whatever we do is consistent for everybody across the board. Unfortunately, we don't have control over what the tax rates are in different countries and how those will be administered, but making sure that we're building out a scalable solution that, it's good for the employees, it's good for the company, and finding where those two things intersect, and then iterating with that over time. If maybe a decision's right when we have 10 people in a country, and then there's a different decision that we need to make when there's 50 people in a country. And then doing that transparently and doing that consistently for everybody across the board to make sure that it's easy to understand the why behind what we're proposing, so that in case there's maybe information that we don't have, somebody in that country can provide that information to us so that we can make sure to take that into consideration along the way.
Yeah, thanks, Brittany. And to add on to that, our goal is to be able to scale in all these countries and to be able to grow our team members from where it may be initially early that doesn't affect a whole lot of team members, but to be able to put a structure in place that will allow us to support 50, 100 team members down the road. And taking a little bit of extra time to make sure that we get it right will avoid a lot of distraction and confusion down the road. So we hope to do it right the first time, and then we have something to build upon.
I would like to ask, what does best solution mean? I mean, best solution for the company would be like paying less. Best solution for the employer would be to get the same net salary. And like for the Austrian conversion, we noticed for a few months now, and there's now an uncertainty for us how much and if at all our net salary will be dropped. And like 10% in a net salary drop takes years to get back in compensation by getting up in the role. So what does best solution mean here?
I think the best solution is what fits the boundaries of that specific country. And it's not that we as an employer want to pay less. You also must understand that you have to understand that we also have the 17% contractor factor. It's not that we take it out, we exchange that for benefits and those kind of things. And although you maybe don't see or feel that in your monthly pay, but is an additional spend for the company. And I think it's always a mix of a match of what is good for us and what is good for the employee. And you really have a say in that. So that's also why we're setting up these AMA sessions with the team that we are converting. I think that's something that I really see a change. And I think the March last year when I joined it, these conversions were treated really differently, and we're really professionalizing this entire process. And but I do feel for the people that we are converting, because I do understand that you are concerned. So and it's up to us to take that concern away, also by being transparent, starting this AMA session, and also if you're really feeling concerned, speak up, reach out to us. There's an issue, who's the DRI, just go ahead and fetch us and share concerns, and as early as possible, so we don't end up, if we would say, well, this is the best solution according to the rules and regulations of that specific country, and you're not happy with it, based on your concerns that you could have been shared at the beginning. I think it would optimize the process if you just take that back, share your concerns from day one, and repeat, and try to really challenge us. Not too much, of course, but I think you understand what I'm saying.
Yeah,
Nicholas,
I understand.
I want to chime in. The Total Rewards team also does a full analysis on what we're giving back. So the percentage that you could be dropping. I understand we don't have control over the income taxes, but we certainly check it during the risk assessment to understand what change would happen for the team member. So that's part of the consideration. But further to that, if we can't supply the benefits in the location we wanted to replace that percentage, we come up with a new solution and we figure out what can we do and how can we make sure that it's a fair conversion. That sometimes slows us down, which is not a bad thing, because then we have to nearly go back to the drawing board. So if a country has been sitting for a long time, it's sometimes something like that, where we can't offer benefits. The country mandatory, governmental benefits are amazing and we can't replace that. But then we do need to go back and figure out what are we going to do with that 17% and how are we going to make this fair. Income taxes, we can't change or unfortunately take on. that is something you're responsible for as an employee. And in every country, it's vastly different. And we've discovered now it's even hard to create a trend. Sometimes it's a great trend. Eastern Europe, Russia, Poland, Ukraine was really, we could clearly see the alignment. But in other locations, it's much harder and very, very different location to location.
And one thing that too that's important on the income tax, and I know we're getting a lot of questions there, is, you know, what is the sort of cultural norm in that country? And, you know, if you weren't working at GitLab or you were going to be hired as an employee for another company, what would that look like? And, you know, there's certain things that we do have control over, there's certain things that we don't. There might be some countries, you know, where it's actually more advantageous to be an independent contractor than it is to be an employee, but that adds additional risk and liability to the company, which adds additional risk and liability to that employment relationship. And that's what we're trying to avoid with scalable solutions, to make sure that we mitigate that risk so that everybody is in the best place possible. And that's sort of, I think, what we mean by best solution.
Thanks, great. Wei Meng, if you're on the call and you'd like to verbalize your question.
Yeah, sure. So
Great.
several of my direct reports are going to have a large drop in net income due to a different taxation scheme in their country, resulting from the conversion from independent businesses or contractors to an employment model. So my question here is, what options are available to managers to make this less painful for, whoever is going through this?
To be honest, so what options are available to managers? So as of the AMA session, I think it's good that you chime in as a manager. But for instance, to give you examples for Portugal and recent one for, well, Singapore that you're in, but one of your co-managers, we had a conversation with them just to understand what their concerns were in terms of the people that they are managing, and that's the solution, or the solution. That's something, an option that is available, that you can reach out to us separately from these AMAs and those kind of things. So if you have other suggestions, just go ahead and do it, because we're all about feedback and we're trying to be transparent as much as possible. But it's also, I think that you know the rules in Singapore better than we do. It's not that we don't know what we're doing, but it's more like you're a local in that area, and you know exactly how that CPF works. And for us, we need to study it. And although it's nice to study it, but I guess these kind of things are really, I think we should have a dialogue, but we also want to prevent that we run into these conversations where managers are not trying to enforce us, but are really challenging us to give their direct reports and better treatment. And I think that's really what we want to prevent. And we're here for you. That's the starting point. And we need to get this done together. And that's what we also need you to support us in getting that country converted. So I don't know whether that answers your question.
I just wanted to clarify that while I am from Singapore, my direct reports are actually from the Philippines. And so I don't really have a lot of insight into their situation, but I do know that, well, it's kind of like a double whammy, because I just took over these reports. And also from my understanding, the Philippines is actually in the final stages of basically closing the PEO conversion.
Mm-hmm.
We do encourage this in our issue templates. I made a recent iteration, and I will link now in the doc to the issue template. It's really important that you send those people to us. So it's really important that, as per that template, that they reach out to us and highlight their concerns. So if you can encourage them to talk to us, that would be incredibly helpful as a first step. As a second step, we really want to partner with managers and leadership at GitLab. We're all in this together. We need to do what's best for the company as well as for our team members, but all GitLab ITBV contractors will be converting. So that's important to note. We can't make exceptions, because that adds additional risk, and it also makes it incredibly hard to scale payroll. So as I partner with those teams, I can imagine in some countries we're sitting with 2 2 payrolls. If you're in 68 countries, that's a lot of work. So we are going to be converting all GitLab ITBV contractors, but at the same time, we don't want to alienate or create a really horrible experience for someone. And so please ask them, encourage them to reach out to us. The email for everyone on the call is countryconversions@gitlab.com, and I'll link to the template for easy access. Vadim, if you're in the call, I think I saw you. Please feel free to verbalize. Great.
Thank you. Yeah, thanks for the opportunity. Of course, I appreciate it. This meeting is focused on country conversion, but I would try to put in a more general relocation-related question, which is on 3 parts. I have heard different answers, and that's why I'd like to clarify those. I haven't been able to use the compensation calculator to look at different locations, and I'm a sell. So does it cover sales roles? How does it cover the sales roles? Secondly, part of the same question, if the really results in a lower compensation package, will the lower package apply, or will it be maintained at the previous level? And then I've taken a look at the risk matrix, and I see a few countries there where we supposedly or presumably cannot hire, such as Spain and France, for instance. I'm sure there are others. I was curious what the situation is. I've seen that before actually as well, and I hear differing opinions on that. Thank you.
Sure. So I can grab the first part around the compensation calculator. So there are certain sales roles that are in the compensation calculator and certain sales roles that are not. So for example, customer success falls into the compensation calculator formula. So that 17% is applied to customer success roles, field operations roles. With respect to our SDR compensation or field sales, like strategic account leaders, roles, those are not in the compensation calculator. We take a more regional approach there because of the way that those roles are built. So those do not have the 17% applied. Similarly, there's a whole separate purpose behind that where hiring sales individuals as contractors has its own risk that I'm sure Igar could speak to a little bit differently, which is one of the reasons why that factor isn't applied, is because we typically don't have strategic account leaders or other revenue generating reps as contractors. But the second part of your question, if a relocation results in a lower comp package, can you be a little bit more specific around when you say, will it be maintained? In what way are you asking about it being maintained?
Right. Well, I'd like to clarify that I am a full-time employee in the UK, so it's GitLab UK Limited. It's not about contracting. The second part of the question was, I've literally anecdotally, but I'd like to bring this into the open and to ask, I've had conversations that if you relocate from a higher paying country to a lower paying country, you would not go, your compensation rate or compensation package will stay the same. And I'd like to raise that and to get a clarification whether that's the case or not.
Sure, yeah. So I think there's a couple things that we have to make sure of. First is, do we have a way to employ somebody in that new location, and what does that employment relationship look like? So if you move to, outside of the UK, for example, it might result in a brand new contract or a new employment relationship. As part of that new contract process, we review compensation in the same way that we review if you were perhaps a new hire coming in, to make sure that it's within the proper bands, and have that conversation as part of that relocation process. We'll make sure that it aligns to Compa Group, make sure that it aligns to the local market rates. And then, the Nadia's team would take over on actually sending out that new contract. If it's within the same country, then it's usually just what's the differential between those market ranges. So for example, I recently relocated from Nashville, Tennessee to Washington, DC. So I didn't need a new contract, but I did need a review of market to make sure that, I was still in line with local market in the same way we would do with any other comp review.
Okay, great.
I hope
Thank
that
you.
clarifies.
So, yeah, so if I understand your answer correctly, the local rates will apply in
Correct.
Okay, fine.
Yeah,
and
but if we do it, it's not just an automatic, it's a market review. So we would never just say, oh, the differential is X% differential, and so that's the new rate. We actually go through a full analysis, and we offer it as part of a new contract or a new letter of adjustment, for example.
Okay, great, thank you. And then the third part of the question was, I've seen a lot of countries actually in the mix. Some of them I've heard we don't have an entity we cannot hire, and they're still in that Excel list. So what is the situation here?
Do you want us to talk specifically about France, or?
I've taken those two as examples.
Well, to give an example about France, so the compensation model we have, and the employers' contributions in France are just not matching. And that leads us to the decision to appoint France as a non-hiring country, to be honest, because it's outside of our hiring model. And that happens for some countries, and some countries like Crimea or United Arab Emirates, those kind of countries, those are prohibited as far as I know from US law. So that's each country has its own sets of regulations, and some countries we have to pause because we reached, for instance, Singapore. We paused for a little bit because we were at 8 people, and we were just past that critical mass for the exposure that we had. I hope that explains it.
Sorry. Okay, so my understanding is that the Excel covers equally countries where GitLab has entities and where potentially people can be hired as contractors. And that explains why some countries where we say we can't hire potentially can be hiring locations. Just to clarify, is that a fair statement?
Your internet connection is slightly unstable, so I didn't get that last phrase.
Sorry, I was just verifying that my understanding is correct, that there are countries where we used to say we can't hire, but they are still on the list and the risk assessment because potentially it is possible, but it's...
Yeah, correct. What we try to do is evaluate certain countries moving forward, because countries do change their law, but that's really dependent on how fast they are changing or opening up to our model, to be honest. So and that's a case-by-case analysis.
But Demon, if you've got any feedback on our main issue, I've linked it there as item G under this question, where all our countries are listed, where we blocked, and blocked is not the wrong word, the right word, where we paused and unable to hire. So if there's any feedback on the content or the way it's written there, please let us know so we can be more clear on why we can't hire in a specific country.
Great, thank you, will do.
We're at time. Thank you everyone for contributing, and please feel free to reach out to us. Country conversions at GitLab, you have the email, so please feel free to continue sending us questions and feedback. Have a lovely week. Stay warm, and it's cold in South Africa, so that's why I'm saying stay warm. Take care.